This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back. This is Joe Rabil. Going to give you a stock market update. We've had some wild volatility, but we're back to a new high. Let's evaluate how strong this high is, whether there's odds of continuation or a reversal. All right, we're going to do that. Do want to mention, if you have an interest in learning some of these techniques, especially when I get into the ADX and the MACD and the different time frames, you might want to take a look at the book. It's at rabilstockresearch.com/book. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, let's start out with the sentiment has made a jump this week. We got a move from 21% more bulls than bears up to 26% in a single week. Pretty good jump. I mean, we had to move down to around 20% in a bull market. That tells us that, you know, the risk is lower for new buying. So I'm still considering this positive. If we get back up 30 or something like that, then I'm going to switch this back to neutral. And then obviously if we get up closer to 40%, it's really 35 to 45% more bulls than bears, then it would switch back over to the negative side. Also, the overbought, oversold oscillator is still in the neutral camp, but it has moved up. It's getting closer to overbought. If you notice, price has broken out and we are nowhere near. In fact, we're making our second lower high. Well, this made a double top here, but now we're making a higher high and this is making a lower high, starting to look a little bit like a potential divergence. Now, as I've told anyone who's seen any videos that I do on divergence, you know that price really kind of has to confirm that, meaning we'd have to see this re-enter and fail, maybe next week or something like that, have a bar that takes out the low of this breakout bar. And if this stays as a lower high, then we'd have confirming evidence of divergence and sign, potential weakness that could cause this to come back in. Now, I don't know that that's what I'm thinking about, because one of the things you don't see is the RSI 20 has held above the 50 level. So go back through any of my old videos on RSI and you can see that this is actually setting up a second RSI buy signal. Now, I know some of you might be thinking, because the RSI 20 made a lower, I'm sorry I don't have it on here, but the RSI 20 is actually making a lower high like that. But it's still above the 50 level and we did not go to a new high here. Okay, so I'm not as concerned about a little mini divergence there. Now, if we make a follow through, then it's very possible that we're going to make a higher high here and that's going to eliminate the potential for divergence. But the fact is that we're getting pretty good reactions once we get to this neutral level. Anywhere below neutral, we get a good reaction. That's 3 times now. That's happened over the last few months. Now I had a request, which I think was a really smart idea, of switching this and showing, making this to be like the monthly and then showing the trend and the momentum and then the volatility and the overbought, oversold, and kind of lining all those things up for each of the 3 time frames. The reason why I don't do it that way, and I wanted to explain this on the video, is that I really look at these are our primary indicators, all right? Meaning the trend and momentum in these 3 time frames are really, really important to me. Those are primary for me. The rest of these below are conditions. They're secondary conditions, meaning if the trend and the momentum are good, right? If both these are good, then we can give these a little bit of grace, all of this, all right? Now, what these help with, especially these bottom 2, is with our timing. So if we get into a situation where the market is dropping hard, and down here, we had this was actually bullish down here because it got way, way overdone, okay? So we want to be on the lookout for that, where these match, where we get overbought, oversold, and the sentiment matching together, meaning we get green here and green here. And that's where we're getting down under 30%. And this is getting into a more bullish area, meaning people are getting more bearish. All right. So we're looking for sentiment readings that are opposite of what you'd think. So we want people to get We want to be contrarians when it comes to sentiment. So we're looking for, in a bear market, we want this number to be negative, okay? In a bull market, we want it to drop down to around 20, something like that, or even in the teens. And we've seen that a few times over the course of the last year. And those were really good opportunities. So we want to kind of use these together, almost like a little buddy system when we get those opportunities. And when they're both negative, even if everything here is bullish, if these are negative because we're getting too bullish and this is getting too far overbought, then we know that the timing is not good. Okay. So, but that doesn't mean that there's a problem with the trend or the momentum. So, but I want to lean on these are more important to me, and these are kind of the secondary. Now, volatility is kind of unique in that it's not as much of a timing tool as it does just give us the backdrop of what type of environment we're in. All right. And right now we've got dailies at neutral and the weekly is negative. So let's go ahead. So I want to just make sure you guys see this. The trend is positive in all three time frames. Monthly momentum is bullish, and the weekly and the daily are neutral. Now you could flip if you said that you were keeping track. I know a lot of guys keep track of this because I get some emails about it. If you said that both of these were positive, I wouldn't have a huge problem with that. If you said this was positive and this was neutral, I wouldn't have a huge problem with that either. I'm going to explain why I did not flip those to positive yet. But you could really be kind of straddling this line. They're right on the cusp of turning positive if we get a little bit more follow through. All right, let's look at what's going on though, especially with this volatility. We can see the flip in the volatility. Do you see how for basically the entire year we had a downtrending volatility line, which is the average true range of the S&P, all right? And if that's declining, the environment is pretty good. The risk is lower, meaning we don't have that much volatility in the trend. And that means our risk of getting stopped out because of a lot of volatility is lower as well. All right. So that's why I call it a risk factor. We want to recognize that. So right now, the volatility is climbing on the weekly chart, but you can see the trend is up too. This is not bearish. This is not bearish. What it is it's a higher risk uptrend. Higher risk uptrend, right? Versus this period here where we were moving up, and even during this decline, it did rally, but this moving average stayed down. So through this entire period, we really didn't have a situation where it was higher risk. It started to increase in risk right around June, July. This line started to turn to the upside. All right. So we're in a higher risk environment. Doesn't mean it can't keep going. It's just you got to be a little bit more careful, be more cognizant of the fact that if you get bad entry in a high volatility environment, your odds of getting stopped out are pretty high. Okay. You got to make sure you got good entry, maybe be looking for things that are independent movers of the market. All right. One of the things I would suggest, and one of the things I'm doing with my subscriber base is I'm telling them that I'm going to be looking at a lot more smaller cap stuff. If we look at the IWM, if you go and look at the IWM chart, look at the big base that's forming on the monthly chart. All right. I'm not going to spend the time with it. Most of my subscribers see I do a couple shows each week and I go through this. There's huge base forming in the IWM, in the Russell 2000 index. And to me, it's set up to participate if the market keeps going. So I would be looking at those stocks, and those stocks have a lower correlation to the S&P chart for the most part, for most of them. So I think that's a good way to think about this, is maybe favor that a little bit going forward if you want to play to the upside. And then, maybe you get in a stock that kind of does its own thing regardless of what the market does. Because if the Mag 7 decide to keep correcting, then the market's probably going to have a hard time making big headway to the upside. But you can make money in individual stocks. And the good news about what I saw this week is that there were a lot of different areas participating. It wasn't just 10 AI stocks. Now, it was just a few on the first day off the low. All right. But when we got the full reversal back up, it really improved dramatically. There were a lot of stocks that participated. So I wanted to make sure I got that across. All right. So we look at the daily volatility. It is back above its moving average. Now, the moving average is still falling. So that's why it's neutral. If we climb any more and turn this back to the upside, now we have rising volatility and rising volatility in both time frames. That is not ideal. It's not an ideal situation to be pedal to the metal and putting all your money out there and putting a lot of risk out there, right? You want to kind of leg in. We do have good price action, so we want to kind of play the game, but you want to play it with I think, a little bit more like put a toe in the water, see how it plays out, add a little bit more, do that kind of thing rather than just diving in with both feet. And it just sets the stage because we've got this little doji breakout bar, right? I mean, for all I know, we're going to come in Friday morning and this thing is just going to have a really ugly day. I don't know. I mean, I don't think so. I think the overall pattern looks okay, but we've got to deal with the fact that we've got a higher volatility environment right now. And if we look like this and this, then this is a home run breakout. All right, this is like put your money to work. Let's get some positions on. For now, I don't have a problem getting positions on. Just make sure you're not too focused in on any one sector, and make sure you're not playing with really high volatility stocks that look just like the market. All right. Okay, let's switch over. And you can also see what I'm describing. Here was the low risk entry, the pullback pinch play, right, in late 2023. And since that time, we've just kind of continued to lift off. We had one dip. Well, we had one pause bar and then one dip that didn't last the month, right? And it just keeps kind of getting stretched farther and farther away from the 18-month line. Now, I'm not saying that it's got to go down. I'm just saying this is not anywhere near as good an entry as we had here. So this is more of a continuation signal rather than the original breakout area, right? Original breakout area. And then now we're getting these follow through breakout levels. And so, it's okay to play the game. You just got to be more careful. The farther this goes and you keep getting these breakouts, the higher the propensity for false for breakouts not to hold. And, it's what O'Neill calls late stage breakouts, which are they have a higher propensity to fail. All right. So you want to be aware of that. Now, let's just look at the momentum because this is really close. We've got one more day left in the week. And if we get this to cause this to cross over, then I would have switched this to positive. We don't have that yet. If you notice, green came up and it actually held the red. They were basically like at the same price, but it held the 25 line and it's ticking back up. So I view this kind of positively. If we got the crossover, if it had already happened as of Thursday, then I probably would have switched the momentum to positive. But all in all, most of the time when we get this positive cross, here's the 25 line, and get blue, the ADX crosses above, and then it comes back below. That usually means more consolidation. It doesn't mean go and break out. So I'm not going to fight this. If we make a higher high, especially if green DI comes up and makes a higher high and this crosses over for the week with reverse divergence, right? We have two layers of reverse divergence. You see the reverse divergence there. And then we did it again here. You see how we made another lower low and a higher low. So we've got those in place, and now we've got the breakout. We have to respect it. And this doesn't, it's not ideal because of how far away from the zero line it is. But the overall action is not that bad. It really isn't. And the fact that green is kind of staying above the 25 line, if that makes a higher high here, then we're probably starting a new expansion phase. So those are the kinds of things you want to be watching as we move into next week. Now, I think it's less of a question mark about the daily because we got this breakout in the daily. Yes, this crossed over, but green hasn't taken out the red, and we've made a full-length move. Do you see how we've already gone from here to here? That's a pretty decent sized move on the daily chart. And yet green DI is just barely, it hasn't even taken out that prior, and the ADX is at 18. So I'm not really ready to call this positive at this point. I think we're going to need a little bit more follow through. If we got this to break out and this to make a, maybe confirming higher high, something like that, then I would say, okay, we've got a bullish condition in place with good trend as well. Now, one of the things the last thing I wanted to point out is the fact that we had real good strength to the upside on the hourly, and we never got red to take over during this phase. Never has happened. This is the first thing we need to look at right now. We've got a strong ADX condition on this time frame. We're going to need red to break out, this to come down and get this ADX to go up based on the red, not the green, if the market's going to turn to the downside. All right. So don't be in a huge hurry to jump off this at this point. We're going to need, the volatility is telling you to be a little bit more careful. But if you have existing positions, I think you got to give this a chance. All right. That's the update for the week. Let me know if you have any questions.